Hello, Mavericks. This is Rob Reinhold. It is nice to be here. Still cannot believe it's December, but here we are, last month of the year, our last couple weeks to make some pips, and then we close the books on 2022, and we look forward to 2023. But let's not jump ahead because we still have a couple weeks left. Let's take a look at the market. So today we had a generally down day, and this was now the fourth down day in a row in equities. This is all coming off of a big rebound in China. So over the last couple of days, Chinese equities have rebounded very sharply due to the belief that the Chinese government is going to relieve some of the COVID restrictions that they've been under. That has not helped the rest of the world. It's helped China, but the rest of the world has been down. Bonds and the dollar were flat today, which again makes this a very curious sell-off because we've been seeing that when bonds and the dollar don't go higher, equities typically go higher. Today, we saw the bonds were very well tamed. They were even down a little bit. The dollar was flat or down most of the day, and we still had a big sell-off in equities. That was a little bit different. We got a little bit of that correlation has uncorrelated. So if you can see, we had a drop in the market, S&P down 1.4%. The world indices have done better, down 1%. We saw crypto is basically flat right now. We'll take a look at the chart. Crypto's not doing anything here. Gold remains strong, and oil has been getting pummeled lately. The last couple of days have not been good for oil. We're now down into the mid-70s, which typically would help this idea that the Fed is going to stop raising interest rates. We just haven't seen that trickle into the market. The market has been a lot weaker than I think it should be with all the correlations that we've typically seen. Let's take a look at the charts here. So we talked about this weekend in our currency room that we were reaching major levels. We had reached this trend line, and we had reached the 200-period moving average, and we had reached this resistance area up here around the 4,100. And we said we will very likely not break through this for at least a week until we hear from the CPI. Now, I thought we were going to hang out in this range. That was my premise, was that we weren't going to see much activity. It was going to be a pretty lame week, and by the end of the week, we were going to be up a little bit, down a little bit, or sideways. These first 2 days of the week have been a lot weaker than I expected. And now you can see we are now coming down into some support levels that I didn't think we were going to come down into. So we've got 1, 2, 3, 4 times it's hit that level. 5 times it's hit this level. And you can see that we did get a little bit of a lower shadow today. We did get a little bit of recovery at the end of the day, but look, this candle, this big red candle, is an ugly candle. We're definitely going to have to back off of our outlook on equities because we now are trading below the 20-period moving average. And that's going to be the first thing that we're going to look at. Say, hey, you know what? We cannot be as bullish as we were in equities because of that. If we take a look at the VT, same thing. We talked about how we are up in these levels, very big resistance levels. We thought we were going to hang out again in this area. The VT is held in a little bit better. We're now holding the 20-period moving average right at this last support. But look, I can't put lipstick on this pig. This candle today was a nasty candle. And if we get another red candle tomorrow, then this support is broken. And we're now looking to head down into the 87. We're now looking to head down into the 85. The market really needs to hold here for the bulls to be comfortable. Because after this, we start to get down into levels where we're down below the 20. We're starting to really chip away at this big rally that we've seen since the bottom in October. We come over here to cryptos, and we've been pretty clear that cryptos aren't really doing anything. And look at it. Long, lower, and upper shadows on the top and the bottom. This is not good trading. We like to trade during moves, trends. We don't like to trade during chop. We're in chop. So we've identified there's chop. Let's just put it on the back burner and we'll come check back in on it later. So as I talked earlier, look, we have to downgrade our market outlook. We were at a moderately bullish area. Now we're just at a mildly bullish area. And if we get another red candle tomorrow, I think we really have to take a look at, hey, you know, this is closer to a zero, meaning there's really no trend whatsoever here. We'll have to see what happens, but there's no question that the market is less bullish today than it was just a week or two ago. Let's take a look at what is on the calendar. We do have Aussie GDP tonight at 5:30, but guess what? I think you can ignore that. We already heard from the RBA Monday night. They didn't raise as much as was expected. They had this number. They knew this number. This number is likely going to be weaker than forecast. Forecast of 0.7 is likely going to be weaker. The selling already happened. The reaction already happened. I don't think you're going to get any reaction out of it. On Wednesday, though, we have a big report here. Bank of Canada. They're looking for a 50 basis point raise, and they're widely expected to be more dovish than the Fed. We'll have to see what happens. So I think this is the next good trading opportunity. Until tomorrow morning in the U.S. session, I don't think there's going to be very good price action. There wasn't very good price action today. There wasn't great price action yesterday. So I think the first part of this week is really just a dud. The next big news announcement is going to be the PPI on Friday. As you can see, I am not really excited about this week. I just don't think there's going to be a lot of movement here. So let's check in on currencies and let's try to identify what actually is moving. Now, this is where we were yesterday at the U.S. close. Basically, the pound was looking a little strong, the dollar was looking a little strong, the yen was looking a little weak. Everything else was right in the middle. We don't like to trade anything that's showing a velocity of 0, +1, -1. It's just not moving enough. These were the only pairs, and frankly, these pairs didn't do much today at all. We go into the performance. Cryptos, okay, you had a little bit of a movement out of Litecoin and XRP, but everything else, look at this. For cryptos, that's almost a zero. I mean, that's a really, really flat day for cryptos. This just continues to support the fact that cryptos are range bound. There's no reason at all to even look at trading them. Until they break out and do something, I don't think it's even worth looking at them. We come over here to the Forex market, and look, things moved. Things are always moving. But look at the moves. Dollar up 0.18. That's so small. We typically get one or two currencies that are plus or minus a percent a day. Last week, we got a couple days where things were plus or minus 2% in one day. This is nothing. Look at Aussie. Aussie did nothing. Euro did nothing. Yen did nothing. And the things that did the most, 0.25%. So look, we've liked the Kiwi. We said the Kiwi looks to be strong. Okay, it was strong, but there wasn't any real money to be made. We thought the CAD was going to be weak. It was weak. Okay, but there's just, again, there's not enough juice out there. There's just not enough volatility, at least for a trader like me. I'm looking for like 1% moves. I am totally uninterested in movement like this. I would rather sit out and keep my powder dry and jump on the market for it to jump. So let's go ahead and see if we can actually find some opportunities where something looks good here. I'm going to just start off with the Forex market because, like I said, I think it's a waste of time and potentially going to suck you into a trade if you even look at cryptos. I think it's not even worth looking at them. Take them off your screen. We'll check back in on them later. Here's the dollar. Now, this is a daily chart. Let me go back to my position over the weekend in the currency room. I liked dollar short. I really liked dollar short. And on the weekend, this is where we close on the weekend, was right here. We had just had a big move down. We had a big fall. And over the weekend, I said, look, I like dollar short, but it's too extended here. It's too extended here. I need a bounce. I need a bounce to be able to sell into. So this is where we were. Last week, we had this move down from here to here. Now I'm saying I wanted a bounce. And I even said in the video, if I could write the script for this week, we would see a nice dollar bounce on Monday, Tuesday, and Wednesday to where I could really go in and take a great short dollar position. So here we are. We're now on Tuesday. We've had a pretty nice bounce in dollar. Exactly what I wanted. So my premise is that I want to take a short dollar trade later in the week if the dollar jumps up. We've now seen a nice little bounce. Here's the problem. The dollar is saying, Rob, I'm not done yet. I'm not done bouncing. We had this big bounce off the bottom. A lot of energy was expended. And then we just high based. And now we're looking to break out. So if I had to trade the dollar right now, if someone had a gun to my head, said, Rob, you have to trade dollar, I would have to be long. I would have to be long dollar. Everything in the shorter term charts are telling me be long dollar. That's where you want to be, long dollar. Now, this doesn't fit my premise at the beginning of the week. So for me, I will just sit and wait for my original premise, which is I want to short the dollar after it's had a rally, exhausted itself. I want to cash that on the way down. So for me, dollar is still the trade I'm looking for, but I'm not looking for it right now. And in my opinion, the dollar is still going higher. I did like the yen short, and the yen has really done nothing here. Same thing, we had this big move down last week. We're getting a little bit of a bounce. As you can see here, the yen doesn't look as strong as the dollar. If you wanted, you could absolutely look at dollar yen long, and that's a pair we'll take a look at. But let's see if there's something better. Yen is like, look at it. EMA is flat. We're just not going anywhere. Let's see if we can find something with some velocity. Swiss franc was not on my radar this week. And it's saying, hey, you know what? I'm going to be a little stronger than you expected. This is a 1 hour chart. And you can see here, in the short term, the Swiss franc is looking to move higher. There is a lot of overhead resistance we're moving into, but I can't deny that the Swiss franc is showing me relative strength. I'm going to give the Swiss franc a +2. Come over here to the euro. Say, all right, euro, are you doing anything? And the euro quickly tells us, no, I'm basing here. I'm basing here up at this resistance level. Until I break out, this is going to be a very frustrating trade. Long upper and lower shadows, they trigger your stops all the time. Don't trade in this. Trade in these candles. These are the candles you want to trade in, not these. So euro is a 0. Pound was actually a trade that I liked early in the week. I did like the pound. I said, look, if I'm going to take a trade on Monday, it's going to be a pound trade. And you can see it went up moderately. It wasn't a great, we went up maybe 0.5% at the most. But you can see after we got this spike higher, we've sold off and we're now breaking down technically. So for me, the pound is no longer on my radar for a long trade. It's really fizzled out. It's fizzled out and now we're having a pullback. And until it completes a pullback and makes some more moves, I am uninterested in being long pound. CAD was the other one on my short list. But same thing, the CAD had a big move last week. Big move last week, big move down. And you can see we did pop up, but CAD has been weak. CAD has been the weakest currency out there this week. So I like it. I like it on the short side. We are running into Bank of Canada tomorrow morning. So I think you want to be active in CAD. Let this thing bounce. We could bounce all the way up to this last support line and still not violate any downtrend. In the short term, the CAD is in a bounce. So we want to wait for it to top out and potentially take a short. Dollar CAD might be one to take a look at, but it's not ready yet. We heard from the RBA and they disappointed the market with a smaller than expected rate cut. And you can see we're just stair-stepping down here. There's no denying that the Aussie is one of the weaker currencies. We do have some support right here, but look at this price action over the last couple hours. This is just a beautiful low base. We got to move down, and then we're just getting this low base. I think you can also look to be short Aussie over the next 24 hours. And let's finish off with Kiwi. We've liked Kiwi for a long time, and Kiwi has been a very strong currency, but take a look at where we are in the waves. We just had a huge expansion of this wave. There was a lot of energy to get to here. And you can see right now it's resting. It's resting. It's taking a little pause here. Until it's done with this pause, I'm not really all that interested in it. Look, it's just like if you take a look back in this chart, it's like this period right here. This period right here where we just didn't go anywhere. It was tired. Kiwi has been very strong, but it just is having pullbacks and bases. Pullbacks and bases. We just made this last run. Moving averages have flattened out. There's no reason to be really excited here about the Kiwi. Let's update where everything has gone. We've seen pound go down to neutral. Swiss franc has strengthened a bit. And we've seen CAD Aussie this is where we are right now. If you need to make trades, and again, no one needs to make trades, but if you're going to make a trade over the next 24 hours, these are the pairs. Strong dollar, strong Swiss franc, weak CAD, weak Aussie, weak yen. Let's take a look at some of those potential trades. Now, look, I'm going to be very upfront here. I do not like the market over the next 12 hours. Until the Bank of Canada comes out, I am actually not even going to have my system on. I'm not looking for trades over the next 12 hours. But since I want to talk about something with you, let's take a look at the one pair I think makes some sense. Dollar yen. Now look, this is dollar yen. Dollar yen has been on a big downtrend. At the moment, it's showing some upward momentum. I personally don't love to trade these trades because it is counter trend. So I don't take these trades. But as I said, if someone was going to take a trade over the next 12 hours, this is where you have to be. This is where the momentum is. So dollar was strong, yen was weak. We also had Aussie was weak. So we could also look for something like an Aussie dollar short. We can see we're down here at some support levels. So I'd want to see this, looks like it wants to base for a bit. A breakdown of 66.85 would be a good place to put a signal to take a look at this trade. And then the other one we talked about was dollar CAD. So dollar definitely strengthening his CAD at the moment. Over the last 3 hours, we're getting a pullback. Let's just let this thing pull back. Let's let it pull back. It would be great if we could get a pullback to this 136.10 area. That would be wonderful. Get a pullback to here, get a nice candle off that. That would be a decent trade. But I think that is the point. Decent trade. That is the best you're going to get, I think, from the market. We just spent a whole lot of energy last week. This is a consolidation week. Next week, we've got the CPI out of the US. We're likely to get another explosion of energy. These are the weeks that can really churn up your account, where you can just grind away and lose a little bit of capital to when you actually come to a good week, you have a lot less capital to work with. These are the weeks you like to keep your powder dry and just be very cautious of trades that you enter. To wrap this up, we're looking at narrow ranges, not a great trading opportunity. I think the next thing you want to take a look at is Wednesday AM Bank of Canada. Let's see if that can give the market some action. But other than that, I really think you want to just be very cautious this week on placing trades. Maintain your capital because next week is likely to be a much better week. Thank you for joining me, everyone. Take care. Goodbye, everyone.